Setting up a global business from India in 2026 is highly accessible, but whether you're shipping physical goods or selling digital products, picking the wrong financial infrastructure creates immediate, expensive bottlenecks. The decision usually comes down to two distinct categories: traditional enterprise B2B banking tools or modern digital checkout platforms designed for multi-currency transactions. Defaulting to a recognized brand name, or whatever platform your accountant suggests, without checking the specific feature set is a costly mistake. A mismatched platform forces your international clients to pay steep currency conversion fees, breaks domestic Indian payment links, and leaves you patching together clunky workflows just to get paid. To map the exact tool to your operations, we are going to conduct a structural audit of three major players: Karbon Business, Playto Pay, and finally Skydo. There is no universally perfect payment platform. There is only the mathematically correct setup for your specific operational DNA. Indian businesses operating globally fall into distinct cohorts, and they move money in entirely different ways. This chart maps funds flow, inward receipts versus outward remittance, against business model. Bottom right, traditional B2B operations require enterprise compliance for outward remittances. Top left, modern digital businesses need smooth inward multi-currency receipts. Middle left, freelancers rely on large, infrequent international wires. If you take a modern digital business from that top left quadrant and force it into a traditional B2B payment stack, your checkout conversion rates will inevitably drop. Plotting your daily operations correctly on this matrix is the only way to eliminate wasted margin. First, we have Karbon Business. This is specialized infrastructure designed specifically for traditional B2B import and export workflows. Its primary operational strength lies in moving money out of the country. Karbon handles outward remittances and A1 import payments seamlessly. If you pay foreign vendors, the Income Tax Act requires you to file Form 15CB. Karbon processes this documentation natively, making the platform essential for businesses with heavy outward supply chains. This diagram illustrates a major structural limitation for digital startups. Right now, Karbon's live virtual bank accounts are restricted to USD only. When a UK client tries to pay in euros, they hit a barrier and are forced into either an expensive currency conversion or a separate payment link workaround. For an agency invoicing clients across Europe or the UK, that forced conversion inflicts a financial penalty directly on the client, making your services more expensive. Add to that, Karbon does not offer native recurring subscription billing, nor does it integrate domestic Indian UPI for your local buyers. Karbon handles supply chain compliance efficiently, but for agile digital startups operating across multiple global currencies, the architecture is too rigid. Playto Pay operates on a direct counter philosophy. It is a full-stack digital checkout built specifically for inward monetization. Its primary advantage is immediate access to multi-currency virtual bank accounts. Instead of just USD, Playto Pay provides live accounts in British pounds, euros, and UAE dirhams. This completely removes conversion friction for your international clients. This interface graphic shows how Playto Pay unifies the checkout experience. It also includes native automated recurring billing. If you run a software business, automatic dunning and retry logic on failed cards are non-negotiable per survival. And it integrates domestic Indian UPI directly into the same dashboard, uniting your global and local revenue streams. The trade-off is that Playto Pay lacks the deep corporate spend management and specialized outward 15CB compliance found in Karbon. By solving the fractured checkout problem, Playto Pay is mandatory for businesses dependent on varied inward retail and multi-currency billing. For a highly specific group, freelancers and agencies dealing exclusively in massive, infrequent B2B wires, we have to look at Skydo. This bar chart compares the fee scaling on a single $50,000 international wire. Skydo caps its fee at 0.3% for amounts over $10,000, taking only $150. On massive invoices, that flat fee cap maximizes your profit margin significantly. The severe trade-off is that Skydo completely sacrifices modern checkout. There is no card processing, no payment links, and no subscription architecture. We see exactly what that means when we shift the scenario to a standard $50 monthly SaaS subscription on this feature matrix. Karbon and Skydo simply lack the native architecture to handle it. Optimizing strictly for the lowest percentage fee on high-ticket wires means sacrificing the flexibility required to run a high-volume digital business. The definitive rule for 2026 is simple. Stop chasing generic percentage points and optimize strictly for how your customer actually wants to pay you. In this flowchart, if your primary revenue flow comes from modern digital models, SaaS founders, creators, DTC brands, or digital agencies, your route goes directly to Playto Pay. This secures your multi-currency capability, subscriptions, and UPI in one unified stack. If you run a traditional import and export operation heavily reliant on outward vendor payments, your route points to Karbon. If you are a high-ticket service provider receiving structured wires over $10,000, your route goes to Skydo for pure fee minimization. For mature, dual-flow operations, there is the coexistence strategy, running Karbon strictly for your outward vendor payments, while simultaneously running Playto to pay for your inward receipts, creates a mathematically perfect, zero-compromise financial stack. The ultimate global payment stack is simply the one that removes all friction from your unique revenue pipeline.